What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are breaking down how you can trade long-dated SPY options with a lot less capital. So if you're excited for today's video or just curious to know what Fridge Financials is talking about, feel free to like the video, subscribe to the channel, and turn on the bell notifications for all the future uploads we will be having on this channel. Now, what we're going to be looking at is right now the markets are closed at the time of recording this video here, but what I want to basically bring to light for you guys is how you could trade options, with limiting your risk. You also limit your upside potential essentially, but you could also trade very expensive contracts that will be a little bit cheaper. So we're going to break it down here. One of the most popular ones that a lot of people trade almost every single day, and definitely every single day, every hour, every minute, is SPY, which is the S&P 500 ETF. It just tracks the overall market of the top 500 companies in the US. Now, what we will be breaking down here is basically how you can trade options for a lot less capital, a lot less money you need, and it limits risk, and your potential is still very, very good. So what we're looking at here is that SPY is closed right now at the time of recording this, and they're trading at $566, almost $567. And when you're looking at how options works, if you're curious, if you've never seen the options game before, basically trading options are contracts that allow you to have access to 100 shares of a stock, of an ETF, of whatever, without having to pay the full price for it. And you're saying, well, Fridge, what's the downside to that? I want to pay less and have 100 shares of SPY here. And the downside, obviously, is that there is a time frame that you have it for. You have access to these 100 shares only for a certain time period. Okay, so if you were to buy 100 shares of SPY right now, it'd be about almost $57,000. It'd be $56,683 to be exact. What you could do is you could trade an option here. Now, what we are looking at the time of recording this video here is, say, again, so as you will know, this is the options chain you're looking at here. Now, before we get into a lot of the details here, you have buyers and you have sellers. Just like you go to the store, you could buy something from a seller. Same thing here. You can buy an option, you can sell an option. The buyer pays the price, the seller collects the price as a result. What you also see is that you have call versus put option here. Basically, a call option means that you're betting for SPY to go higher, and a put means you're betting for it to go lower. Okay, so you have buyers and sellers. You have buying it to go up, you have buying it to go down, right? So things to keep in mind about. And as you will see, you have a lot of expiration dates here, because this is basically what's happening is that you're going to have access to 100 shares essentially as the buyer for a limited time as to how long you want it to go. So what we're looking at here, so let's say we're talking and you're sitting down with Fridge Financials one day after work, or you're listening to this video here, or you're following me on Instagram or TikTok or anything of that nature. And you're sitting there saying, Fridge, I think SPY is going to go up. I think the bottom is in. I think the markets are going to rally now. I think we're in a great state overall for the economy. I'm thinking that between now and, say, the end of the year, December 31st, so almost a year out essentially, I think SPY is going to go higher. And you're saying, okay, well, and I'm thinking, all right, fine. Again, we're all entitled to our opinions here, and things to keep in mind about. I am not a financial advisor. This is not financial advice as we're going through this here. But you're sitting there saying, Fridge, I did some research. I did my own research for things. I did my own due diligence, and I think that it's going to go higher. And I'm like, okay, cool. So say you want to buy, you're going to bet that SPY will go up to 567. You're sort of saying, well, that's an easy bet because all I'm missing is 17 cents right here. That's all I'm missing right now in this case, right? And when you're buying this contract here, right, you're giving yourself access to 100 shares of SPY, but you're paying $42.90 per share compared to $567. Obviously, the difference is that you only have access to these shares for a limited time until December of the end of the year here. So you're paying $42.90 per share, and since contracts trade in 100 share increments, you're paying $4,290, which you'll see right here. That's your loss. You're paying $4,290 to give access to 100 shares, which is a lot cheaper than paying $57,000 for the 100 shares. The only difference and why it's so much cheaper is because you have access to it for a limited time until the end of the year. So You're going to sit there and say, well, Fridge, well, taking a look at this, like, I only need SPY to go up 17 cents, right? That's all I need. Because, again, I say it's going to go to 567. It's going to go to 567. If it goes up, then I'm good to go. My contract worked out. I did an amazing job. I made some money. Anything above that is profit. And the thing to remember is that your break-even price comes from what your strike price is plus how much you pay for each share. You're paying $42.90 for each share. So even if SPY goes to 567 on the dot, you're still losing $42.90 per share. So what is the break even? Well, you take what you want SPY to go to, plus you got to add in how much you paid per share, which is $42.90, gives you the break-even price of almost $610. So even though you're betting for SPY to go to 567, to actually start to make money, you actually want it to go above $610. And as we'll see here, once above 610, you're making money. It keeps going and going and going. So that's kind of how the option chain works, right? And now you're sitting there saying, okay, well, Fridge, I don't have $4,300 in collateral or in cash to pay this for here, right? Like, yeah, obviously I have buying power right now, but what if you just started investing? You open up Robinhood and you don't have access to this funds here. You can still have ownership of this contract here for a lot less. Okay. And this is called an advanced trading strategy for a reason, because it involves you doing two things at the same time. So remember how I said earlier that the buyer is the one paying for the contract here and the seller is the one that collects it. So if I'm buying this option here for $42.90 per share, which again, times 100 gives me $4,290, I'm paying for it. If I wanted to be the seller and pick a strike price a little bit farther away, I'm going to collect this much money back per share. So say I'm going to sell the say I want to sell the 568. Why not? What you are looking at here is you're paying for $42.90 per share, but then you're being paid $42.16 per share for the other contract. And look at what it does as a result. Now, obviously, we can scale this up, but this is just for a minimum amount of money here. What you will notice is happening here is that you're only paying $74 because, again, these offset each other, and your max profit is limited to $26. But that's okay, though. Your max loss is $74 only instead of the $4,300. And obviously your profit is unlimited here, and your profit is very limited here to $26. But again, you're trading very little capital, right? So if I wanted to buy this contract here, this contract would cost me only $74. And all SPY would have to do between now and December is go up 0.15. 0.15%. My break even before was 610. Now it offsets my break even down to 567, 568 about. It offsets my break even. Obviously, it offsets my loss or offsets my profit, but it also de-risks my position here. Because as long as it closes above 568, we collect $30. And what you will notice is that the difference in the strike prices here is $100 here. So with a $100 trade that you're looking at here, you can make $30 or you would lose the 70. So again, you either make the 30, you lose the 70. That's your $100 for the strike price you're looking at here. Now, that's pretty good. Making $30 and then losing 70. That's a pretty good return. You're paying $70 to potentially make $30, right? You're paying 70 to make 30. You're looking at almost a 50% return between now and the end of the year, which is December 31st, right? And now, obviously, you could scale this up in different ways. Say you want to buy 100 contracts. 100 contracts would give you $10,000 worth, and you make $2,600. You're making a lot of money here, and your max loss is $7,000. So again, max loss $7,000. Max profit is still limited. The other one was, unlimited. But all you need SPY to do is go up 0.21 between now and December 31st. And that's it. You're making money, and that's profit. And that's an amazing return, because think about it. You're making, 30% return or so in less than a year. And S&P 500 only returns about 10% per year. So this is an advanced trading strategy here. It is called a call debit spread. Debit is because you are paying for this option contract that's happening right here. You're paying for this strategy here. So you're paying for it. So it's going to cost you money. So it's a debit spread. And again, it's a call one because you're betting for SPY to go up. You could do the same thing and bet for SPY to go down. You know, they work in different ways, right? So there's a lot of different ways you could trade this out. Now, let's say you want to go a little bit riskier, right? You have to go super risky, but say you want, you know what, Fridge, I think, you know, I want to bump up my profits a little bit because the farther away you go from this contract here, the farther the spreads are, the more profit there is to be made, but you also have to be careful in terms of how much you're paying for it. So let's use easy numbers here to make our life easier. Let's get rid of this one here. Let's say you want to buy the 570 strike price. Again, break even is 610 by the end of the year, which again, you're looking for SPY to move up about 7.8% between now and the end of the year. You're sitting there saying, well, Fridge, I got $500, you know, worth of trading I can use here. I have like a $5,000 portfolio. I have a $4,000 one, whatever the case is. Say you want to go up to the 575 and you want to offset it, right? So selling this option here is going to offset what you're paying down here. And the difference between the two of these is $309. So $309 is what you're paying because this is how much you're paying. This is offsetting it. So the difference in those two is $309. And what you'll notice is that, you know, you have a $5 strike price increment here. So it's $500 worth of a trade happening here. And again, you'll notice these two numbers add up to be the $500 you're looking at here. But your max profit, as long as SPY, hey, I need SPY to go up 1.44% between now and December. It was up 1.5%. Today alone. At the time of recording this video, it was anyways. But so it needs to go up 1.4% between now and December. And I would make almost $200 for paying $300. That's pretty good. That's like a 60% return rate that you're looking at. That's amazing. And again, it's a call debit spread, right? So what this does is it allows you to trade options and to pay for and buy these expensive contracts without having to go crazy, right? If you wanted to be super, like way far out in, like, you know, way out a year out in this case, right? Again, SPY returns about a year, about 10% annualized every single year. You could make some good money on this. Because if you take a look at buying the 570, selling the 575, you're making, again, about 60% return in a year. You're giving SPY, tariffs, the new administration in the White House. You're giving all the time for it to fizzle out and for markets to rebound and to start to get to all-time highs potentially. And you're making 60% return in this case, right? And again, obviously, if you were to trade, you know, 10 contracts, you're making 3,000. You're making 2,000 on 3,000. If you were to trade 100 contracts, you're making a lot of money, right? Now, obviously, I'm not going to go crazy like this, but it's a way to say, hey, I'm going to bet for SPY to go up, but it allows you to make sure that you are not paying these prices, because what you'll notice is that if you did just this one, you're paying a lot of money. All right. So I don't know why this, oh, it's because I have a lot of contracts, and that's probably why. Let me get rid of all that. But so say you wanted to buy this one out, again, far out in this case. Oh, sorry, I was selling this. Oh, buyer. So again, paying $5,000 here. Instead, you're only paying $300. You know, obviously it offsets your risk and it offsets your reward. But it's a good way to get into trading options, especially with SPY when you're looking at far out positions. I would be curious, honestly, also to know how far out. So you can go all the way out till 2027. So you're looking at almost 3 years out. You're looking here. Now, again, this is the way to trade this kind of option here. If you're looking at 3 years out, you're looking at 10% per year on average. You want to get at least a 30% return on your trade you're opening here. So again, buy the 570, that's going to cost you $9,000. Sell one a little bit higher up, it's going to cost you $200. You're looking at about a 50% return here. This is about 50-50 right here. It's pretty dang good. 50% in 3 years is, you know, you're averaging about almost, 16% a year. That's still better than S&P on average. And basically saying, hey, SPY needs to go up 1.4% in 3 years. So, just another trading strategy thing to take a look at. Thank you guys so much, as always, for watching today's video. If you made this far in the video, feel free to like the video, subscribe to the channel, and I hope you guys have enjoyed this. Turn on those notifications for all future uploads. I hope you guys are learning things from Fridge Financials, teacher by day, financial enthusiast by night here. Leave your comments if you have anything down below, and as I always will say, I hope you guys are making money in the market, and I will see you in the next video.